Now, a lot of people that take our real estate class know someone who wants to invest in real estate. And I just wanted to take a quick second to ask the question, well, what does that actually mean? When someone says, I want to invest in real estate, what are they actually saying? Well, there are generally three types of real estate investors broadly. One type are the fix and flip type of investors, where the investor want to buy a property, fix it up, and then flip it for a profit, right? That's one category of real estate investor. And frankly, there's a certain personality type that might be associated with that. A lot of the time, people that want to fix and flip, not that it's good or bad, but they do want to get in and get out. They have no interest in holding the property for a long time. They want to get in, buy it, rehab it, and turn it, and use that capital and deploy it for some other purpose, maybe for their next real estate deal or for some other type of transaction. So the first type are the fix and flip. The second type is the capital appreciation type of real estate investor. And that type of investor often, at least philosophically, might have their pulse on news reports or might have their pulse on other things that are going on in the community, and they really have a stronghold on what might cause a piece of real estate to rise in value, at least in their own mind. The third type is a cash flow type of investor. This type of real estate investor is really looking to buy a property, rent it out, and basically create some reasonable rate of return on their initial investment. So the third type, the cash flow investor, if they get appreciation, great. It's kind of the gravy over the mashed potatoes. It's the icing on the cake. So when someone comes to you as a real estate agent and says, hey, look, I want to invest in real estate, it's important because you don't want to pitch someone who has a long-term philosophy on a fix and flip deal. If it's a fix and flip type investor, if you're saying, hey, look, this football stadium is going to be built, it's possible, not guaranteed, but possible the value could go up over time, they might not want to hear that if they're going to have to wait 5 or 6 or 10 years to see the return that they deem reasonable. So it's super important as you're out there networking and handing out your business cards and meeting people and really try to make your business grow. If you hear someone say, hey, I want to invest in real estate, a logical question to ask is, well, what are your goals, right? Are you looking to get in and out quickly? Are you looking for capital appreciation over the long term? Are you looking to cash flow? I mean, a little bit of all three would be good in a perfect world, but really understanding your customer and understanding what they deem to be an acceptable rate of return is useful. Now, you want to balance this with what constitutes reasonable in your market. Now, these days in 2016, with rates being so darn low, you see capitalization rates at 3%, 3.25%, 3.5% on these trophy type properties. 20 years ago, if you told someone there's a 3% rate of return on real estate, they would have laughed and walked the other way. You could have got that in a certificate of deposit. So, balancing the goals of the investor with what's reasonable in the market is probably a good skill set to have. Now, if you're just starting out, a very good basic site that a lot of real estate agents and commercial investment brokers use is a site called LoopNet. LoopNet.com, you can get a free account. They'll call you to ask you to upgrade. I'll leave that decision to you. But LoopNet.com is a great site for you to understand what's happening in the market, right? Know what capitalization rates are doing, know what multifamily property trades at, know what retail property trades at, know what rents are doing for industrial property. It has raw land, so it's a really good basic resource for a lot of people that are just starting out in investment real estate sales.